Hi, let's have a look at Bitcoin again because the picture is very confusing, right? Some people say you should buy this dip. Bitcoin is now very cheap. Others say the bear market has just started, right? There's no one that's buying right now. Rather wait this out. And since we are not yet confused enough, let's add more to this. Let's look at all kinds of different models. Let's look at price data. Let's look at on-chain data. And let's aggregate all of this. Let's try to get a differentiated view, an objective view, to potentially see where a floor might be for Bitcoin. So some of those charts you've already seen, others you haven't. And so I will just go through the common ones very quickly. This is Bitcoin dominance. So this is a measure of how much of all of crypto is locked up in Bitcoin. And so currently we are looking at 42.5% of all of crypto being Bitcoin. And what's interesting about this chart is that when Bitcoin dominance is going down, this is just another expression of the altcoins rallying. When Bitcoin dominance is going down, that means there's more risk appetite, right? People are taking risk, they're buying risky altcoins. And so when Bitcoin dominance was very low, as here in January 2018, that was also the time when the Bitcoin price was comparatively high. And that was the time where we then entered a crypto winter, where we went down by more than 80%. And so right now we are still at a comparatively low level, right? Not historically low, but still relatively low. And since all of crypto is going down, Bitcoin is in relative terms holding up comparatively well. So Bitcoin dominance is going up simply because Ethereum, Cardano, and any other altcoin, they tend to lose more during bearish times. So just looking at the Bitcoin dominance, we might just be starting with this negative momentum, right? But we are going to look at a lot of different charts, but this is something here to keep in mind. Bitcoin is still comparatively a small fraction of all of crypto. A lot of portfolios are still heavily invested in altcoins. Now let's look at Bitcoin versus Ethereum. So the Bitcoin price divided by the Ethereum price. This chart looks very similar historically speaking, right? And it does appear like Bitcoin is comparatively cheap versus Ethereum. Or in other words, Ethereum is comparatively expensive. And even though Bitcoin dominance might not rise back to, say, 70% or so, one might argue that Bitcoin could again rise against Ethereum quite heavily, especially if the efficiency of the Ethereum blockchain doesn't improve much over time. If competing layer ones, such as Avalanche, such as the Binance Smart Chain or Phantom, if they can pick up some of that market share of Ethereum. So with this measure, one might argue Bitcoin is comparatively cheap versus Ethereum. Now, those are very common charts. Let's look at where we might see a potential floor. This here is the very long-term Bitcoin chart, since Bitcoin was just a few cents all the way to today. And what we can do here is we can draw trend lines, such as this one, which could potentially give us a floor here. We could also draw another curved line over here. These are not regression lines. These are simply curved lines that try to somewhat connect those tops here. And so by looking at this, we could see in the worst case a drop to potentially, let's say 15K or so, right? Depending on how quickly we fall from here. So this chart doesn't necessarily say that everything here is over, right? We did have more volatility in the past, and nobody says that something comparable can't happen again. Now another potential support is the 4-year moving average. Now here plotted in blue, and we can extend this line here, which is kind of arbitrary, right? Because we don't know the future prices. We can't necessarily for sure say where this line is going. But if this time we are again bouncing off the 4-year moving average, we are looking at a drop to maybe 21K or so. Let's switch from TradingView to look into Bitcoin.com. So here we've got a very similar chart, the 200-week moving average. So I just looked at the 208-week. That's pretty much the same. And in here we also have some color coding indicating that whenever we have a very large distance to that moving average, that we might be overextended and then drop back to the floor. And so where are we with this 200-week moving average right now? Currently we are looking at 19K. But since we rarely go below this moving average, this is pretty much monotonically increasing, which would indicate that we would bounce off earlier than 90K, maybe at 20K or 21K, depending on how quickly this negative momentum could continue. Now, the issue with this approach is that you don't necessarily get a lot of buying opportunities, right? Like when you go into this, you've got just a few days, and who's really going very massive on an investment during such a short period of time? Usually what you want is a longer time horizon, right? You want to have an extended period of time where you can accumulate. And so waiting for this moving average to hit is maybe not necessarily a good idea. Probably you want to buy earlier than that. And so instead of looking at the 200-week moving average, let's maybe look at the 2-year moving average, right? So let's go from 4 years to 2 years, which is here in green. And now we've got an extended period where we could potentially buy, right? So several months of price action where you can accumulate. And we had that here after the Mt. Gox crash. We also had this here after the 2018 crypto winter, and here during the Corona crash. And so currently the 2-year moving average is at 30K. So whenever we go below 30K, this might already be an entrance point to start accumulating. It might not be the exact bottom, but it could be a good entry point to start aggressively buying in every month. At least historically, this approach worked pretty well. If you're wondering what this red line over here is, it's simply just 5 times of that 2-year moving average, kind of like indicating where we might be overheated. But I think this is not necessarily now the time to discuss if we are overheated or not. That's pretty obvious. We are currently cooling down. We get a similar picture when looking at the logarithmic regression, a trend channel that has been valid for a very, very long time, right? And where we only went below the lower band over here during the Corona crash. We went down by around a third of this lower trend channel, right? Here we were at 7.5K and we went down all the way to 5K. So currently this lower trend channel, it is at around 27K. So the lowest we could potentially go is 1/3 below that value. So that means 18K. 18K would be the absolute bottom according to the logarithmic growth curve. But of course, you never know if you really reach this, right? We might simply just bounce off the lower band over here. We might not go 1/3 below that lower band. So you can never really know for sure where we go. You can only approximately time this. And so the latest one might argue to start accumulating again is at 27K according to that model here. The market value to realized value z-score looks at on-chain data. So here we are looking at how much are coins actually getting moved and how much profit has been realized. And that value is in yellow over here. And we are rarely below this. Whenever we are below this value, then we tend to get out of this fairly quickly. And so right now we are still above that value, right? We have been below it after the 2018 crash. We have been briefly below it during the Corona crash, and currently that value is at 455 billion. And currently we are at 687 billion. So these are market cap numbers, not price numbers. So that means another potential drop until we get to a clear accumulation zone of 33.8%, which would translate to a Bitcoin price of 23.8K. So it's very interesting, right? When looking at this, we look at very different kinds of models. We look at on-chain data, we look at moving average data, we look at regression data, and all of those models tend to show us similar ranges of where Bitcoin might be extremely cheap. And what's also interesting is that no matter what approach we look at, so we have looked at several approaches now, no matter what we look at, none of them seems to suggest that we are already at the very bottom. But of course, none of those models are perfect. They're just useful to make some kind of a judgment call, but they're not perfect, right? We were not able with any of those models to predict the top over here. Most models did not expect the price already to turn around in Q1 of last year. Now let's look at 2 more models, but before we jump into that, if you enjoyed this content so far, please give this a thumbs up because it will help the channel grow. Thank you. So next we've got the 1 year plus HODL wave. So this simply means what percentage of coins has been held for more than 1 year, or what percentage of coins haven't moved for more than 1 year. And this is an indicator of how heated the market can potentially be. Because when the price tends to move up, the long-term holders, they tend to sell, right? So the percentage of coins held for more than 1 year is declining. And then once the price goes down, people tend to hold onto their coins, waiting for the next leg up. And so when we look at the recent development over here, we can see we have been sideways for more than a year, right? This is not news for you, but it also means that many people are not moving their coins. They're holding onto their coins. And what we notice over here over the very long term is that this orange line, it tends to increase, right? More and more people tend to hold Bitcoin over the long term. This value over here is higher than the values over here, which is higher than the values over here. So one might argue that before the next rally, maybe we get another all-time high for this 1 year plus HODL wave. So again, just another indication for the potential scenario that we haven't yet seen all of the pain. We might have to wait for the supply to further dry up for people to continue holding on to their coins until that dried up supply can help create new price rallies. And a very similar thing we see here for the realized HODL ratio. So again, a measure of how heated is the current market, how many people hold for 1 week versus 1 to 2 years. And when this is very high, it simply means there's a lot of speculation going on. When this is very low, it simply means there's mainly long-term investors currently in that market. And you want to have a lot of long-term investors because they dry up the supply, they push up the price. The shorter the time horizon of the market participant, the easier the price can depress. And again, what we see over here is there might be more room to potentially fall. But one might also argue that simply the volatility of this indicator is decreasing over time, right? These peaks here, they tend to decline somewhat, right? The active speculation isn't that crazy anymore, and so is the conviction of holding, right? We had way more long-term holders over here during this post-Mt. Gox Valley than we had after the 2018 crash. And so maybe since this peak wasn't as high, maybe the next valley won't be as low as before either. So maybe there's some kind of a flag pattern shaping over here. So a lot of data, a lot of different points to consider. And the takeaway from this is you can look at the data from all kinds of different perspectives, and you can never be sure where the exact bottom is. Neither can you be sure where the exact top is. But you can get somewhat of a feeling for it, right? You can potentially give this a certain weighting, like how likely is it that we further continue to fall, or how likely is it that we further rise in prices. And so that's how I would approach this when investing into crypto. If you think we are potentially rather cheap, then dollar cost average in. When you think we are rather potentially expensive, then dollar cost average out. And so you will never pick the perfect bottom, you will never pick the perfect top with that approach, but on average, you are still able to somewhat ride the long-term waves. And so if you found this content useful, consider subscribing because I publish videos regularly. Feel free to also check out the premium membership to be found at thebitcoinstrategy.com. Link is also in the video description. We've got daily market updates and we've got a private chat where you can ask me any questions. Last but not least, we've also got a Telegram group. Simply search for Bitcoin Strategy channel within the Telegram app. Note though, I will never message you directly, right? So if you join that group and somebody messages you directly, that's very likely a scammer. So be careful, don't get scammed. Thanks for watching and see you next time. Bye-bye.